read your notes.
Just put it here. Good morning, ladies and gentlemen. It's very good to see so many of you here. My name is Tim Sebastian. It's my honor to moderate this session over the next hour. It's great to be invited here. At this stage of my career, it's great to be invited anywhere, I have to say. But this is an enormously instructive, productive conference, and we look forward to the next hour very much. African multinationals with runaway levels of growth led by visionary entrepreneurs. How far will they go? What is their full potential? Which sectors will they come from in future? Who's next? And when are we going to see the first Fortune 500 company coming from Africa? Just a few of the questions that we hope to answer over the next hour with three enormously successful CEOs. Vimal Shah, who is CEO of Bidco Oil Refineries, Mohamed Devji, who is CEO of Mohamed Enterprises Tanzania and a member of the Tanzanian Parliament as well, and Igor Sanomi, who is CEO of Taliveras Group. Please welcome them, ladies and gentlemen. May I just say, over the last day, you may have been putting your questions via the iPad. We're going to do things in a more traditional way in this session. So we have microphones in the hall. If you have a question, please do raise your hand. We'll get a microphone to you as soon as possible. We don't necessarily ask you to give your names, so your anonymity will be assured if that's the way you want it. But we do rely on your participation in these sessions to get the most out of them. These gentlemen are captive for an hour. It doesn't happen very often, so please make the most of it. If any of them runs for the door, you'll draw your own conclusions from that, but I'm sure they won't. Vimal Shah, let me start with you. Going multinational, what was the key moment in which you thought, I can be bigger than this? You started off with a small company. When did you have these big ambitions? What led you to that?
Thanks, Tim. I think we started off in 1985 with a small plant in Nairobi. As soon as I finished university, we had this plan to say, let's look at agribusiness. And my father had been in coffee business before that. And 85, we started off as a small scale, 20-ton per day plant with a small capacity. But before that, the whole story comes from university in terms of what do we want to do. My father had a clothing factory and, making garments, stuff like that. So we said, let's go back into the cotton value chain and try and see if we can do farming, spinning, weaving, textiles, and garments, the whole lot. And having looked at that, the value chain that looked good was the oil side, soap side, and crushing seeds, because from cotton seed you get lint and seed. And having done that in university, did a feasibility study, made a whole project, and went from bank to bank, trying to see if we can raise some money. That was the biggest challenge, People said, young lad, what experience do you have? Not much. And that whole game plan started off, we started off small, aimed big. But in 1999, we said, okay, now we've achieved something in the market, because we started off with oils, and we started off with producing fats, oils, margarines, detergents. You've achieved something in Kenya. When you've achieved a good market share in Kenya, we said, now where do we go next? Because once you've achieved some market share. So we got our goal created at that time, and it says to grab, grow, and sustain #1 market share in the African markets by the year 2030. This started off in year 2000. So it's a 30-year plan to go all over Africa with our brands. And we thought that this is what we should do. And since then, we're working on it. And that's when we started off firstly in Tanzania. Then we went to Uganda and Rwanda now, and we're trying to open up 3 or 4 more countries now going forward.
Presumably along the way there were plenty of people to discourage you as opposed to encourage you. People saying you're overreaching yourself, you're trying to get too big too quickly.
I think initially, even before we started, we were told, you're going into this sector, you got multinationals there and they'll kill you. Example was Unilever, they're in this industry, they'll make sure you don't survive. And the day came in 2002 when Unilever was sort of selling brands across the world, and we acquired their entire business in East Africa, selling the oils and fats. And that was the ultimate, because we thought, okay, fine, now we can take that over. And we had a vision to grow from within, from Kenya, to grow outside into Africa. Our market is only Africa. We're not going to Europe or into Asia or any other place. And Unilever by that time was investing more in Eastern Europe and Asia, and that was more happening. So we went from our place, and today we have a much larger market share than them.
But you didn't have many role models, did you? You didn't have many people you could say, okay, I'm going to be like him.
There weren't any.
Multinationals were all from outside Africa.
Absolutely. There were very, very few people you could benchmark and say, this guy's done it, that guy's done it, and therefore we had to start off on our own. But it was with a clear vision, a clear goal to say, this is where we want to go. What are our strengths? And we found our strengths to be able to decide faster on the ground, not have a board meeting. We had the MD of Procter & Gamble come to us and said, I wish I was in your place, because they talk to Egypt, Egypt talks to Switzerland, Switzerland talks to US, and they just can't get any decision-making on markets. And we could move within a day, have a board meeting. In 2 days' time, we start moving things. So being agile, being nimble was important. And I think having a clear-cut goal to say, this is where we want to go. This is the sector we want to play in. Being focused, FMCG, and I think going the full value chain was a big issue for us. The full value chain means going from the soil to the frying pan. And we said, let's do it from farming right up to processing and to distribution with our own brands. And that's what really made a whole change in Africa. Because in Africa, you don't have contract packers or contract manufacturers, or we're not in that silo business where everybody's got a specialty. And therefore, you control the full value chain. So you control your quality, cost, delivery, and therefore, I think we succeeded.
If you were going to start again today, what are the mistakes that you would avoid that you made the first time around?
It's been 28 years. I think I'd do it in 10 years. Ramp it up faster, because today, when we started off, there was no internet, there was no mobile phones, it was all different. Today, imagine, you can go on, sitting here, you can go on to Google and get all the research you want. I think the time frame going forward for us is going to be much faster. We have 16 years left for Africa.
You say go much faster, but we were talking a moment ago outside, and you were saying that too many people are trying to get a fast buck in Africa and aren't prepared to stay the distance.
Tim, the problem is this, and this is what I said to the crowd here. A lot of private equity funds, we have in Nairobi about 40 different private PE funds who are trying to look for deals. All of them just can't get deal flow. They say we can't get deal flow. And here we are, we're saying there's so much more deals to be done on the ground. The difference is they have a very short-term attitude. They come into Africa with a harvester's mentality. When you come as a harvester, you've got a 5-year plan, 20% IRR, get in, get out, and try and sell the business. Get on to the next one. You've got to come into Africa with a planter's mentality to say, I want to be there long term. Patient capital and a term of 10 years minimum. I heard Schwartzman talking about it yesterday, saying 10 years is a stretch for us as Blackstone. I think 10 years in Africa, your multiples will be much, much larger than what you get in 5 years. I think a lot of them are shortchanging themselves by saying 5 years in, out. Family offices, people with high net worth, a lot of them say 5 years in and out. Quick return. You can do that in the States, not in Africa. And I think in Africa, you've got to come in and say, I want to be in the long haul, even if it's 10, 12 years. The returns are going to be even more superior than what you talk about in your 5-year term.
So your message to the bankers in the audience, be patient.
I think patient capital, important, but if you want a fast buck, go to the States, get in, get out. In Africa, you won't even get exit strategies immediately. You've got to work on it, build it better, and then you can exit.
Apart from everything being faster and the internet and the communications much, much faster, how has the business environment changed in Africa since you started? It's
changed a lot. Let me tell you one thing. When we started off, the whole logistics systems were difficult. There used to be speculative commodity traders. I think that a lot of people would be in Dubai in that sense that they're trading. That's all they do, trading. And in trading, it's an arbitrage between selling price and buying price. The difference in Africa was there wasn't a lot of logistics, so people stocked up and the customer came to buy from you. Today, it's changed. We deliver right up to every shop, every kiosk. So that delivery system has changed now. And the modus operandi is different, where you control the whole show right up to customer. The logistics then was difficult. Today, on our laptops, on our phones, we have mobile commerce. Any customer can order via their phone, get their goods, and they will deliver to them. So the whole delivery system, the whole technology use has changed. Information asymmetry. The customer didn't know pricing. At that time, people were, excuse my language, were looting the customer. They could have a price of 10 and charge 100, and they'd get away with it because it was supply and demand. Today, the power is with the consumer. The consumer can see what to buy, where to buy from. And therefore, you've got to be really fair and stable.
What about the risks? to your business? I mean, you work in a continent where you face volatility, differing degrees of regulatory rigor, if I can put it that way, things that would be deal breakers in other parts of the world. But you negotiate these different conditions.
Absolutely.
How?
I think, Tim, that's such an important point. It's called risk perception. We were in New York in Washington about 2 months ago with all our presidents. And if you see the perception of risk, everything is risky. Africa seems too risky. Sometimes some people say Africa is one country. It's not. It's 54 countries. And sometimes it's risky to breathe. In West Africa, it's difficult to shake a hand these days. So it's all risky. The question is a perception of risk. When we look at it from an inside perspective from Africa, sitting there and saying in Kenya or wherever, the demographics are proving clearly. We were 40 million in Kenya. Yesterday it was announced we were 44 million. East Africa alone, we were at 120 million when we joined East Africa. Today we're already at 150 million people. The demographics means people are there. Now the question is, they all eat, they all wash themselves, they bathe, they have all their human requirements. The question is, who's going to serve it? Is it going to be China? Is it going to be India? Or is it going to be Chindia? China, India together? Or is it going to be somewhere else? Who's going to service that market? And that servicing is important.
But the risks are real enough, aren't they?
The risks
look at the violence you've had in Kenya over the last few years.
Yes, and we're still surviving there. We still existed. Business still went on, and disruption was there for a while, but it's sorted itself out. Now today, I can tell you, yesterday I was talking to somebody, he says, I can't come to Kenya. Why? I need a police escort, I need an ambulance behind me, and I need a lot of escorts around because it's insecure. We live there. We don't have a bodyguard. We don't need one. Perception of risk is different. The insurance companies too, they perceive risk as very, very high. I think Nigeria and Kenya has been put on the very high risk record because of Boko Haram and Al-Shabaab. But today, business still goes on, transactions still happen, people still have to eat. When I look at this in terms of markets and markets development, right, the economies are growing. I mean, if you look at them, a lot of you will look at GDP growth and say, GDP growth down or up, my business is not doing well. But our growth rates are getting up because we service the customer in different manners. There are different pockets. There are people being paid on a daily basis. You service them with smaller packs. There are people who get weekly payments. You service them with a different pack. Some people buy monthly. How you address the market and how you really change your methods to address that market is important. The bottom of the pyramid, if you look at the pyramid, the bottom of the pyramid used to be very, very large. And you had to have products there. You had to have for the middle and for the upper. But now the middle bulge, the market's getting bigger. The middle class is really consuming. We're at 34% urbanization in Kenya today. By 2030, we have a vision. We'll be 64% urbanized. We'll have, from 40 million, we'll have a 65 million population. We need about 12 more cities to be built up there. The same goes for all over Africa, I'm sure for every other country. We talk about it. If you look at the McKinsey report on Lions on the Move, they talk about 50 new cities are required in Africa for people to survive because we're all going to urbanize. Now, urbanization means consumption. It means lifestyle similar to what you have in Dubai. When that happens, the market upside is massive.
Okay, Mohamed Devchi, if I can turn to you. Your company contributes 3.5% of the GDP of Tanzania. So the president always takes your call.
Tim.
especially late at night, I expect. Your empire is worth 1.3 billion.
Yes.
$1.3 billion. How big are you going to go?
So we have a vision to be a $5 billion revenue company by 2018. Currently...
Why 5 billion? Why that figure?
Because we have a strategy in place, and we look at the numbers and we look at the growth within all our industry sectors that we are in, and we believe that it is very, very possible to reach that goal. But I also have another vision of employing 100,000 people. Currently, we employ 24,000 people. That's 5% of formal employment in Tanzania. And I want to reach 100,000 people. So we try, of course, we like making money, but we also try investing in businesses that employ people. As you know, Africa, we have 1 billion people, and 2/3 of the population is less than 30 years of age. So we need to address the employment situation. So one of the...
You need to address the mismatch in skills, don't you?
I agree with you. But we need to build those skills, and I think the whole education system in Africa is improving. And one of the businesses that I've invested money in, and many people thought that I was crazy, is in textiles. They're like, listen, how can you compete with China and India as far as textile is concerned? So we have now 5 textile mills, 3 in Tanzania, 1 I've taken over in Zambia and in Mozambique. And we are ginning, we are spinning, we are weaving, we are processing, mercerizing, printing, dyeing, garmenting.
But so are India and China. So how are you competing with India and
I am
China?
competing with them because I am currently producing 120 million meters of cloth, which is the circumference of the world is 40,000 kilometers. So basically, I can wrap the world 3 times with the cloth that I'm producing. So I'm obviously selling this cloth. I believe...
So you set out to take them on?
Very much so, because I believe to be able to want to be successful in textile, there are few ingredients. One, you need to have cotton in your country. So you look at Mozambique, you look at Tanzania, you look at Zambia, you look at Ethiopia, there is lots of cotton, 1. 2, you need to be competitive in terms of power. Today, Ethiopia power is 4 cents. Tanzania is 9 cents. Zambia is 5 cents, Mozambique is 5 cents. China today is 8 cents, 9 cents. So because textile is a huge power guzzler. 3, you need to have cheap labor. If you look at Tanzania, we're currently paying $100 a month. Ethiopia is $45. Mozambique is $80. Zambia is $140. And as we know that the labor market is getting tighter in India and in China, and the levels are increasing. So these 3 ingredients...
So how are you going to create all these jobs that you want to create if your labor costs are so high?
No. The labor cost is lower compared to China in Africa. Yes. So I believe that's also an advantage for us. But coming back, when I got back from university, I went to Georgetown, and I got back in '99. And this is a reality that I want to tell you, that everywhere you touch in Africa, there's a lot of money to be made. We were a $30 million revenue company. This year, we're targeting $1.5 billion. We were a trading house. We currently still trade. And I say trading, we trade in soft commodities, whether it may be sugar, rice. We export coffee, cocoa, sesame seeds, yellow gum to India and all over the world. But our governments have changed. They give incentives for people to come and invest in manufacturing, in value addition, so that you can create jobs. And thus, when I got back, we got into manufacturing, a lot of manufacturing. And together with Vima, we're in edible oils and grain milling, so wheat milling, maize milling, rice milling. We're into plastics. I've launched Mo Cola now, and now I'm going to be competing with Coca-Cola in Tanzania. So we have managed to corner the Unilevers and the Procter & Gamble's in that part of the world with our edible oils and soaps.
How?
So,
How?
Because the distribution that I've set up, I have 120 outlets countrywide. So what happens is any farmer that walks into one of my outlets wants to sell a commodity, right? Whether it may be cashew nuts or maize, I will buy it.
Doesn't matter, you buy it.
I will buy it. I give him the money. What does he do with the money? He wants to buy a bicycle, I manufacture a bicycle. He wants to buy sugar, I sell sugar, rice, wheat flour, whatever it may be. So it's a one-stop shop. How can a Unilever or Procter & Gamble come and replicate that and compete with me with 2 products or 3 products?
So you've got to do everything.
Yes. Again, I echo what Vimal has said.
You've got to diversify.
Yes, because the economy is small, because Tanzania's economy is a $35 billion economy. So if you want to do just one particular business, there's a plateau that you will reach that you will not be able to grow further. So thus, I'm so diversified. So we're into agriculture, we're into financial institutions. So we have an insurance company, thus the diversification.
How did you get started on this? What made you start this?
So
go multinational.
Yeah, I got back, and again, I ran into the same problem of capital. You know, the banking sector got liberalized very late in Tanzania. When I got back, and I remember I went to the bank, and the bank's paid-up capital was $2 million. The maximum they could lend was 20% of the core capital, which was like $400,000. I realized there was no way I'm going to grow. So I started going and tapping money from South Africa, and just 2 months ago, we raised $200 million at very, very competitive rates. And this all is a reflection of how Tanzania has been doing. Tanzania has been growing over 7% over the last 10 years. I mean, Tanzania is a gateway to East and Central Africa. We have natural resources. We've just hit gas, 60 trillion cubic feet of gas. ExxonMobil, Ophir, Statoil, British Gas, got the gas offshore. They're going to invest $25 to $30 billion in an LNG train. We have contracted the Chinese to build a pipeline for $1.2 billion. So bringing that gas into Dar es Salaam. Our challenges have been infrastructure, power. But I think with the gas coming on stream, I think this issue will be of the past. And I'm so bullish, not only in Tanzania, but East Africa in general. You know, Kenya has hit oil, Uganda has hit oil. I believe that we should be growing at over 10%. And we have great leadership of our President Kikwete. And I feel now, if you look 20 years ago, there were many failed states in Africa compared to today. I think they're getting lesser and lesser.
But what are the obstacles that you still face?
I still feel the challenge is infrastructure. You know,
what about bureaucracy? What about corruption?
I agree with you. Bureaucracy is a big problem, and that's why if you see many African countries are doing poorly in doing business index, except for Rwanda and South Africa. So I think that needs to be addressed because business people want to come in, you know, want to invest their money and want to get things done quickly. You know?
But Rwanda has changed and changed dramatically because of political will. Is that political will absent in other parts of Africa?
I agree, but you see, Rwanda also, I salute President Kagame for what he has done. No doubt, I don't want to take that credit away from him.
Are you telling your own president to do the same?
Yes, but you see, our country is a big country compared to Rwanda. So, you know...
It's not about size, it's about will, isn't it?
I think there is a political will, and I think we are changing. And I'm very, very bullish about that, I promise.
But you're still talking about the obstacles. You're still talking about bureaucracy.
Yeah, bureaucracy. Second, I think, you know, I addressed the power issue. We have problems all over Africa where we are not investing enough money in infrastructure in terms of ports. And I know some countries will say, you know, we don't have the money, which if you look at the debt to GDP ratio in Africa is about 60% vis-a-vis the world's debt to GDP ratio at 120%. So I think there's still more room to leverage ourselves and borrow more money and invest in projects like the port. The World Bank came up with a report saying that most of the countries that are on the coast, if they were to invest and enhance their ports, direct improvement to the GDP would be 1.5% to 2%. So it's a no-brainer. We just gotta get it done. We need to improve our rail network. Most of the African countries are depending on trucking, which is by far more expensive than moving goods through rail. And if goods become more expensive to the consumer, they buy lesser. So we need to improve as far as the rail network is concerned also.
So integration. You're talking about integration.
Integration, correct.
Yeah. One of the 3 I's.
Yes.
Okay, all right.
Thank you, Tim.
Igor Sonomi, CEO of Televeris Group. You've successfully negotiated an extremely complex sector, oil, in Nigeria. How have you done it?
Well, thank you, Tim. For me, in my final year in university, I studied geology and mining. And I think what was a defining moment in my life was a road trip I had with a friend of mine who was doing an internship in an oil and gas company in Lagos. From that moment, I kind of shifted focus to look at the downstream industry in Nigeria. And around that period, I think in 1999-2000, there were 4 major issues. One, like Mohammed mentioned, African banks weren't liberalized. So you had an issue of lack of funding capacity from the African banks to support African business and African companies. 2, the Nigerian local oil and gas industry were solely dependent on international oil trading companies that had dominated the trading space in Nigeria. You also have the issue of...
Pretty powerful companies.
Very powerful companies with deep pockets. 3, you also have the issue of the United States refiners focusing on Nigeria, especially because of the quality of its crude, to use its straight-run oil, fuel oil as a feedstock. Also, you had African refiners not meeting up to their installed capacity. So, for me, I saw this as an opportunity, and I looked at it and decided from that day that I will try and build an African BP, an African Shell, an African Chevron. So we took the business head on and started and looked for a way where we could actually create and go through the value chain from not just seeing the oil on paper, but actually physically doing it.
But you came up against a lot of people who wanted to keep you out.
Correct.
So how did you get through that?
Well, I believe in, like my colleague here mentioned, it had to do with perception. There was a perception of African businesses lacking credibility, lacking transparency, lacking honesty. So for us, we just believe that, well, if you say you're going to do A and you do A, it takes you a step further.
But you've got a national energy company in Nigeria that's just lost $20 billion in state revenues. $20 billion.
Well, Tim, that again is perception. If you look at the facts, I don't think that is correct. Any economy that takes a $20 billion hit...
Well, the governor of the central bank said $50 billion, but he lost his job for saying that, didn't he?
I think there's some political undertone to that, and I'll leave it to the government to
so you're saying
to have that debate.
Nobody's lost any revenues?
I mean, that sector... It's a very well-run sector. It's a sector that it's quite dynamic and interesting for foreign investment. And
but it's cutthroat, isn't it, Ego Tsunami? It's cutthroat.
Team, I mean, it's all perception. I mean, cutthroat...
It's not perception, it's real. If $20 billion goes missing, that's pretty real, isn't it?
It's not, and it wasn't missing. Anyway, so to carry on, I believe that the... I believe
they noticed that segue, you know, I think.
No, for me, I think it's all about perception. And again, it's local media reporting. But to carry on, Tim...
And the internationals, yeah.
I believe that a core principle of the present administration has been, creating local content development. And that's actually supported our business and our growth. And today, we pride ourselves as one of the major oil trading companies in Africa. We've diversified our portfolio into the upstream, acquiring upstream assets along the coast of West Africa. We've been able to diversify our business also to contribute our investment and capital into core areas of the economy that needs development. We all talk about infrastructural decay, power, and roads, housing. So we looked at the power industry and looked at that sector as an area we could actually help create employment and build infrastructural development.
But in terms of your multinational, your international interests, you decided to set up a strategic alliance with an oil group in Switzerland.
Yeah.
How key was that to your move abroad?
A very good question, Tim. That was quite key. And what we actually did, going back, like I mentioned, was to actually change that perception of dishonest, not being credible. And for us, Tadiverias, our brand actually attracted the big multinationals and, the big players in the industry. That is just one example of a strategic alliance. I believe also today, I can proudly say, unless otherwise proven, that Tadiverias was the first company for a U.S. investment bank to look at and partner with in oil and gas trading activities. This was never done in the world, and that bank is Morgan Stanley. We took it a step further in the power industry by keeping to what we can say and delivering distribution and transmission projects under certain timelines, and this attracted recognition. I think about 8 months ago, we had a visit for the first time of the president of Alstom to Nigeria, and they picked Tadiverias as a company to work with as a local partner. Siemens, the same thing. So, to answer your question, Tim, I believe that the perception of Africa, has to change. We need to, as people, continue to believe in ourselves and grow our capacity in whatever we do. And this we've done quite well, and we've attracted the right companies, the multinationals, and this has put Taliveras up there in how
but you took on the big multinationals from outside Africa. You took them on in your own country.
Yes.
Is that the recipe for other private sector businesses in Africa to say, okay, I can do as well as the multinationals from abroad?
Well, that's
basically supplant them in your own region, in your own country.
Yeah.
Is that the answer?
Yeah, I'll say yes, because I mean, if you look at it, I mean, the major issue back then was actually the trust the international banks had in African companies to provide the lending they needed to go about their business. So for us, we saw that, and like I mentioned again, it was key for us to build the trust of the international banks. So we focused on doing that and took on the multinationals head on in our country, in the oil and gas trading industry, delivered when we said we're going to deliver. The US refiners saw us as a credible option for supply of their feedstock to their refinery. And we noticed the major oil and gas trading companies taking a step back to align with our thoughts and our vision, and that in turn somehow made these companies to look at local companies with respect, align with them, partner with them in order to achieve their objectives.
You've got offices now in Geneva, London, Dubai, Cape Town, Ivory Coast, Abuja, Lagos. You're taking the fight to the outside world.
Well, it's very interesting because, I mean, if you...
Is that how you see it?
Well, it only comes natural, Tim, because the oil and gas business is very broad when it comes to locations and geographies, you know, where you do business. So for us, for example, if you take a crude oil cargo all the way from Nigeria, it might end up in the Far East. It might end up in the US. So in order to build and expand our business using the Nigerian activities as a platform, we had to set up offices in this region to in turn see what we can offer them and what we can take out from those regions.
Okay, all right. I'm going to ask the audience if you've got any questions before we go on to a more general discussion. If anybody wants to raise their hands? See any hands? Yeah. There's a lady there. If we can get a microphone there, please.
Thank you very much. Can you name 3 things that's needed to retain your competitive advantage and continue to grow as African companies on the continent?
Sorry, we're having difficulty hearing that. I wonder if you'd say it again.
Can you name 3 things that are needed in the near term to ensure your competitive advantage and continue to grow as African companies on this continent?
3 things that are needed, Marshall, to ensure your competitive advantage as African companies. Do you want to have a go at that?
Yeah, I think if you talk about 3 things going forward, because going forward, cost of doing business, impediments to flow. By that I mean your starts from your port right up to the customer, consumer, and that logistics, the competitiveness there. And I think security, because that's a big issue for everyone. The reality and the perception, because there is something different with the reality and the perception. So if we actually work on the reality and really get things flowing, number one, we have last mile phone systems now. I mean, it's the fastest growing industry in telecoms. So really that work is done. So you're no different sitting in New York or sitting in Africa operating. You can just be on your laptop and you're connected. The logistical flow and the cost of doing business important. And the impediments of people, and I talk about people becoming roadblocks where they actually ask for tolls. Tolls means, you know, asking for some rent seeking. If those 3 things are cleared and our borders, when we talk about East Africa, we've opened up our markets, but the greater Africa in terms of COMESA and a whole lot, if we harmonize our laws, because you have differing laws in each country, and harmonizing them all would make you, work everywhere across the board. If you take a product and you say this has got a labeling law in Kenya, and Tanzania is different and you've got to change it again, you won't have economies of scale and economies of scope. We just need to sort that out. And I think it's already happening. East Africa is a model that's opened up, harmonized laws, and we need to now go to COMESA and really open that up. Once you do that, your economies of scale are going to be different. So it's really going to happen. It's not about if it's going to happen, it's about when it's going to happen.
Mohammed Devji.
Yeah, I just want to point out that we need to also sort out our judiciary system, because many a times there are some conflicts between companies. Of course, justice is there, but justice is delayed, and thus sometimes justice is denied. And for businesses, that costs money. So we need to get that straight, number one.
That's something you're pushing for in Parliament?
Very much so, very much so.
How successfully?
I believe we have created a new initiative in Tanzania, and we've put very stringent timelines on all those backlog cases needed to be sorted out. We have a new commercial court that you need to pay more money to get things much faster
But
done.
the backlog is huge, isn't it?
Very huge, very huge. And that's what the challenge is. But secondly, I'd just like to talk a little bit about agriculture in Africa. I think there's a huge potential. I mean, if you look at the size of our continent, I mean, you can fit in the US, you can fit in India, you can fit in China, into Africa. It's huge. And there's a huge potential as far as agriculture is concerned. I personally am in agriculture. I've got 60,000 hectares of land in Tanzania. And one of the crops that I am in is sisal. I don't know if you guys know what sisal is, but it's similar to jute. It's a natural fiber. Today, the prices of sisal in the world are $2,000 a ton, and my cost of production is $700 a ton. Imagine how much money that is. So you're printing money. So there's huge, huge opportunity as far as agri is concerned. But here, you're not only going to make money, but you're also going to alleviate poverty. I come back to that, very important. And 3, create employment. We all know the World Bank came up with a report, Tim, saying that African countries and heads of state had to commit to set aside 10% of their budgets into agriculture, because that is the fastest way to reduce poverty. So I just wanted to highlight that.
Igor Sonomi, keeping your competitive edge, 3 things.
I believe that was a good question, and I believe the first thing has to do with encouraging more investment and finance. And not just the quantity of it, but the quality of it. When you talk about rates, tenor, and that sort of thing. Africa should be seen more as a long-term, on a long-term view and long-term planning. And secondly, travel restrictions. That's another big issue. Within Africa in itself, you find 2 countries that are neighbors, but the process of getting issued a visa takes forever. So I think we need to open up more.
Why does that continue? People have been talking about that for years.
Well, it's very funny, Tim, and I think as years go on and go by, we'll continue to learn, especially like for the UAE and their system. I think we need to open up more our borders and ease out the visa restrictions.
It takes political will, doesn't it?
It sure does. It sure does. And this is a big issue. Well, and the other thing is, you know, Africa within ourselves, we've been able to, especially the local banks and financial institutions and venture capitalists, they've been able to build some sort of level of confidence, and they take on funding from international organizations. Sovereign wealth funds, for example, in each of these African continents. This needs to be pushed further. They need to be at the forefront of investing in their own country because, like they say, charity begins at home. So at the end of it all, it boils down to the level of investment, not just the quantity, but the quality.
Okay, all right. There's a lady over there who has a question.
Thank you. A question to Igor Sonomi. Well done for running a successful trading business within the oil and gas sector in Nigeria, in what many might say is an industry in shambles right now. You look at the piracy within the country right now. You look at corruption allegations right across the board in terms of the ministry. Also, just the fact that Shell regularly declares force majeure in the country. So there's a lot of issues. Perhaps it's perception, and I do know there's a lot of indigenous companies doing well within the oil and gas industry. But it's a tough one for the outside world to look at and really to believe, and your production hasn't increased, and the distribution of wealth hasn't really come from the industry. So good luck for you that you're doing well in it, but what needs to be done to really move it forward, particularly to with you don't have a petroleum bill in place that they've been working on for what, 10 years or more?
Igor Sonomi.
Thank you very much for your...
Because the oil business is a shambles.
Yeah, I understand. Thank you very much for your commendations. Well, I believe that the oil and gas industry in Nigeria is at a very defining moment. Defining in the sense that the legislation are looking at the PIB bill to be passed into law, and you have a drastic change in the way Nigeria used to do business in the past. Now, that change and that evolution is moving towards local content, in-house growth, building local capacity, creating jobs locally. Unlike before, where the multinationals were based in their headquarters abroad and have offices in Nigeria and, take the profit abroad. Now, the profit is being kept in-house. For that sort of thing to happen, you should expect the sort of resistance you're seeing in Nigeria today. Whether artificial, whether natural, you should expect some sort of resistance, and there's always a resistance where you have change. The industry in Nigeria today, I'm part of it. I'm part of it from all the chain. I've built a company from nothing where I walk into people's offices and they say, listen, you're too young, what are you doing? Go back and get a job. And I believed in it, to where we are now, where I can actually sit down and the major multinationals are looking at partnering with me to develop their business. Now, this is an achievement, and I stand here before you as an achievement of that cause in Nigeria. People will fight it. There will be manipulation and all sorts of distortion of facts by the media, sponsored and everything, because at the end of the day, interest is leaving one sector to the other. Thank you very much.
Did you want to come back on that? Do you want to say something else?
I take what you're saying, but when you talk about the petroleum bill that might be passed any day, I've been listening to that for probably 10 years or more. And sadly, people have come and gone, and ministers have since died listening to that and really trying to push that agenda. It hasn't happened. So the government can't get their act together in terms of doing something that everybody is just begging for. And until that's in place, not quite the industry will say in a shambles, but you look at the resources that are there and you look at the absolute shame in terms of what's happening in Nigeria with the natural resources, particularly in oil and gas. But good luck to you, and we're delighted to see that your company is doing well and putting it on the international map.
Thank you very much.
Okay, there's a gentleman in the middle there who had a question.
Hello, my name is Asif Abdullah, and I had the good fortune of meeting Vimal Shah in 1999. I have a transport business in East Africa.
Where is he?
Hello, can you hear me?
Yes.
Yeah. Okay.
We can now.
My name is Asif Abdullah, and I have a company called Prime Fuels, and I do logistics in East Africa, in Kenya and Tanzania. I had the good fortune to meet Vimal Shah in 1999 with his brother, and I was at that time trying to convince him that it was a good idea to use rail. And he told me that impossible, never, it won't work. So I'm delighted to see Vimal now with the progress that he's made, and I'm glad that I'm a service provider to him. My point is, when you say Africa, new multinationals, who, what, and where, the fact of the matter is that the old multinationals left. So where the old multinationals leave, new multinationals have to be created. The second point is, we've heard the importance of brands, and with the populations and the youth of the continent, you will create new brands. These will be the brands. I was in Dar es Salaam day before yesterday, and I saw Mo Cola, and because I have like 400 trucks, And I was wondering who is, you know, you see Coca-Cola when it's Christmas, they have a particular snowman. And Mo-Cola has this like very similar snowman, and it's still October. So the thing that
do you have a question? Do you have a question?
My question is, what do they think of the multinationals' brand power, and how can we use it better in Africa to learn about the brand qualities and not to cut corners when creating our own brands?
Okay, Vimal Shah, you want to take
I think that's a good question. Let's define what is a multinational. The traditional role of multinationals was somebody who's got a large corporate somewhere and they've got operations everywhere else. They had capital, they had technology, they had processes that they knew how to do things, and they were successful in certain markets, especially in the Western markets. And that's what we regard in Africa as a multinational. The question is, if we operate in that same manner, if we have the best of technology, which the same technology as you use in Europe or in USA, you've got the same processor or even better processes, you operate at world-class standards, based on ISO standards, based on Kaizen, whatever. And if you really drive out the waste, what's the difference between a multinational and yourselves? The only thing is capital formation, and that's an important thing here. In Africa, we have a problem of capital formation. If you want $1 billion for Africa, it's difficult within Africa. I talked to somebody in Wall Street and he says, if it's $1 billion for US projects, 1 week. If it's for Africa, 2 years. That's the difference. Because, number one, what is missing is trust. The trust in Africa to say Africans can operate at world class. I think that's where people don't believe it. I talk about perception and reality, but the reality is people don't trust Africa as much as they would trust America. You also, sorry to say this, you also have rogues in Western Africa, Europe and in America too, but they get trodden off because there's much more credibility there. The legal system, rule of law, the contract administration, you can actually get a contract adjudicated very, very fast in the West. You can't do that in Africa. That's why the operating systems needs a local partner or somebody to say, fine, how do you navigate the local sales? The other point is, if you can operate at all these standards, there's no doubt that the African youth, 70% of our population is under 30. The youth of today will want a new brand. They will want a new experience, something that relates to them. If you go to Tanzania, if you speak in English, it's not good. You just got to speak in Swahili. You come to Uganda, if you speak in Swahili, you're no good. In Kenya, English, Swahili is fine.
Okay.
When you operate at different markets, in different markets with different brands, you've got to have a new operating system.
Mohamed Devji, you're nodding at all this. You got something to add to that?
Very much so. I think, like in Tanzania, what we have done is we have created this Mo brand that's competing with all multinational brands, and we have made sure that the quality is top-notch. The product is competitive in terms of pricing. And we've been very, very successful. So I think that I echo what Vimal says, that people want to relate to the local brands.
Okay, in the time that we have left, I just want to see if we can use the voting machines. If you'll take your iPads, I'd like to vote on the question, from which sector will the first African Fortune 500 company emerge? From which sector will the first African Fortune 500 company emerge? A, consumer goods. B, financial services. C, natural resources and extractive industries. D, pharmaceuticals. E, retail. F, travel and tourism. You have that on your iPads. You have those choices. If you'd make your choice now, we should be able to see the results of that very quickly. So 45%, which is the largest number, 45% say natural resources and extractive industries. Igor Sonomi, that's going to suit you, isn't it? Never mind the perceptions or the realities in Nigeria.
Well,
okay, let's do one more vote on by when do you think we'll have the first African Fortune 500 company? A is 2015, B 2020, and C 2025. A 2015, B 2020, and C 2025. Do make your choices now, please.
No, they're already Fortune. Yes. Right. more years.
20.
Okay, B, 61, the near term. B, 2020, 61% say 2020. Final word, Vimal Shah, do you agree with that?
I think it's true. If you look at it, the pace of the speed of everything is going up very, very fast. And I think it's not difficult to get it in 2020, but I would have said 2025 really will have it for sure. 2020 is still, if we get everything right. I mean, there's issues with leadership.
Not in your sector, but in his sector.
In his sector, it's a given because it's already in the ground.
Okay.
We just got to extract
All
it.
right.
In our sector, we got to plant it.
Okay, Igor Sonomi, very briefly.
Yeah,
Vote of confidence in your industries?
Well, I think what the voters have done reflects my thoughts. I think 2020 is realistic. The demand is there in Africa. Where you have demand, you have opportunities. I think we just get it right. We have to get it right, and with the attention Africa is receiving now as the biggest frontier, I think we should capture it right now to achieve that.
All right, Mohamed Devji, very briefly.
I think we already have companies that are in the Fortune 500 values today in Africa, like Standard Bank Group, like MTN, like Sab Miller, who have revenues that exceed $5 billion, that have market cap that have $9 billion market cap. I think we have over 15 of them now.
Okay. All right. Mohamed Devji, Igor Sonomi, Vimal Shah, thank you.
Thank you, Tim.
Very much indeed.
Thank you very much.
Just a reminder that you have a feedback form on the iPad for the end of this session. Please do use it. Be as brutal as you like. You have a break now for 20 minutes. Thank you very much indeed. Thank you.